Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, July 29th, 2025. So, my dad's been away from us, passed away quite some time ago, and today is his birthday. So it always reminds me when I throw the date out. I'm like, wow, it's my dad's birthday. But any case, we had our classic gap up to new all-time highs fade trade in effect today, and I used it. I mean, this is just a 5-minute chart because the high was made within the first 5 minutes. I sold the 64.20 calls and bought the 64.30. There was zero sweat whatsoever on that one. We just came down and I put it in the room. I think I know a couple people may have taken that, and then from there we actually went with the hedge trade where I went long IWM calls and short SPY puts, long SPY puts, and obviously the IWM did not work out, but the spiders trade more than doubled what the entry was for IWM. So it was another decent day in the room, and even for the fund, we had it was another very just no risk. 1340 was what we made for today, and again, there was really no stress at all. But so this was the easy part right here, because everyone, this is now going at 100%. I have not seen this trade fail where we gap up to new highs, and this gap is not filled within 2 days. And you can see it happened here. That was not a gap to new high. Actually, I'm going to go to a 15-minute chart so we can do that. But we had one here, and that came down. So it's just that I don't know what it is and why it is that way. But whenever we get this gap up to new highs, we come down and we close this gap, and it's happened every time. So I'm not going to, fight what this pattern is telling me, and it's been right every single time. So it was an easy trade. But where do we go from here? So this is just some fib numbers from the top we made. Let me take some of these lines off here. This is just for my own trading. So here's support right here, and that's right at the 63.60. I thought we were going to get there today. We just missed it, made it to 63.64, I think, or 63. And then we had a little bounce towards the end. But the one thing that we have really sell signals everywhere, and as far as timing cycles, we're in another cycle right now where each one has been ignored, but we have to pay attention within the next few weeks because, a couple of the cycle masters that I follow are definitely calling for it. And one other person that I follow is, his system is actually calling for some type of really, really hard, steep pullback. So I made the recommendation to start, anybody that's in the quantum stocks, we had a great run. And really just, either tighten stops or take some profits. And, if we get another bounce, use it to move to cash and just wait. Even if they go up higher and the market goes up higher, it doesn't really make a difference. Since I've gone market neutral, we've been really riding IWM, and it's been very, very successful. But for the past couple days, it's really, it has not. I mean, it performed probably the worst out of all of them. So the thing is, here's another reason why I took this trade up here. Was I just did an ABC move. So here's your A, here's your B, and here's your C. And you can see that the top was coming up at 64.18. We made it up to 64.10. So it was, it's kind of a no-brainer for me. And we really spent the rest of the day just selling after the first 15 minutes. So obviously we have this support at 63.30. We have the Fed meeting tomorrow. I'm kind of thinking, I would expect, I don't know, but I would be looking for just kind of a flat market heading into the announcement. And then from there, if he surprises people and cuts rate, we'll probably get a jolt up. But again, for every action, there's a reaction. And if the economy is doing really well, the Fed typically does not lower rates. So it's one of those things we just have to see how the market reacts. But really, expectations are he's not going to do anything. So if that is really, if it's say a non-event, which there's a chance it could be, then everybody's going to be focusing on Microsoft and Meta. Then we have Apple. So there's a lot of reasons that we can expect volatility to hit this market, and you just got to be prepared for it. So if the Bills, if the Bears can push through to 63-60 and then the 63-52, you can see we have some support. They built a lot of support. So this is not going to be easy for the Bears to push this down. But then we have support at 63.35 and just a regular fib retracement at 63.30. This is where, you start, looking at this open gap here at 63.15. And really the major support is down at this. Let me remove this now. Hang on one second. Okay, so really the main support is at 62.81. Looking at the 60-minute chart, again, sell signals this entire time. So we're making new highs, but momentum is not really carrying on. We did burn off some our overbought levels, so we're back to the oversold. And again, we have 63.55, which is the 50-day moving average. And then right underneath it, the 63.35. So this would be the zone that I would anticipate if the bulls are going to really hold it up. It's going to be in this area here. If they lose that, then what we're going to have to do is look at the next zone, which would be pretty much down into this area right here. So it'd be the 60. Was a 6,300 down to the 6,281. Now, if they lose that, that's where we start looking down at these levels here, and we could be making some kind of head and shoulders. I'm not really sure, if that would play out or not. But in any case, we're at levels right now where we haven't really had any type of pullback. We've just gone straight up, and we've seen that before. Not really in this fashion, though, but we've seen these kind of melt ups, and then we get this big drop. So this was going back into March 2024, where we didn't really have any type of pullback, and then we had the drop from 52.68 all the way down to 49.50. So about almost 300 points on that one on there. So maybe that's what we're going to get. Now I wanted to show you the daily chart because I've been showing the wave structure, and it doesn't really look too right when the red is it basically what that is that's your bearish count right here. So there's people, if we get a big drop, then this will now be the regular count, but really you have your 1, 2, 3, 4, 5. So that's saying that we made the top and we have the bearish divergences. But really, the more realistic one that I think is, it all depends too. I'm not going to predict anything on this, but the way that I think makes more sense is we have 1, 2, here's your 3 right here instead of a 5, and from there we get a 300 point pullback like that I just showed you before into this support area. And then from there, we rally back up into the wave 5. And from there, I think it would probably be sometime in mid-August right there. And from that point on to into the October, August, end of August, September time period, I'd be very, very cautious on this market because we're going to have to deflate things. And if this does play out the way like this, it's going to be on everybody's radar that we just made the 5 waves, and this is probably going to be some pretty big bearish divergences in place. So I'm moving on the side of caution on this one. We made some fantastic gains, as you guys saw in the email report. We've opened the enrollment for the fund if anybody's interested. Where we did have a very good showing last night as far as people that want in. So once we start collecting funds, that's when I have to start putting a window on the enrollment. And the reason why is because people invest, they don't want to sit there and wait. I want to put them all in at once. That way, for accounting reasons, I don't have to sit there and run reports for each day. If people come in, their funds may sit in an account for a week or two, and then from there we deploy them all in at once into the fund, so we know this is the date that they started, this is where the fund was at the time, and then we do the profit and loss. So again, if anybody's interested, you'll be getting some type of email a little bit later on about it. Don't if you guys have questions about it, ask me. But we've had a fantastic, we're almost going on a year, and the investors that were into phase one are up over 41%, because the last 2 days we did pretty good. So they're probably up about 43%. So those types of returns, when at the same time period you had the S&P, that so we started the fund in August 15th, so right in this area here, and the S&P was at 5,500. So yeah, it went up to 6,100. But then anybody who is long, say in this time period, had to sit there and endure an almost a 7. Let me see. I'm not really quite sure where we were. So they were around the 5,500, almost a 700 point loss at the point, and from there. Our fund, so they're up from this level. They're up 14%, and or a little bit over that. And our fund, starting at the same period, is up 41%, because we were able to take advantage of this. And volatility, actually, we that's where we get our big home runs, because when we put on our straddles or our strangles, one side makes a huge amount and the other one loses whatever we put in. When the market gets boring, then we just do our iron condors. It's a simple process that I do, and everything is always hedged. I'm never doing just a fully exposed trade, because I don't like that kind of stress at all. And any kind of drawdown that we have, it's limited for the most part. So if you're interested, check the email out and send me an email. And with that, let's see what happens tomorrow with the Fed meeting and then the major earnings announcements. So with that, have a great night, and I'll talk to you guys in the morning.